Good day. Ira Epstein of Linn Associates with your financial market wrap-up for this Monday, and we're now on the 28th of October, 2019 at 3:15 p.m. Central Daylight Time. So as you can see, these will be where the settlement prices come in. For the next 10-15 minutes, there's no trading in stock indices. Then they'll reopen at 3:30, trade till 4 o'clock, but the settlement is determined right now. What a strong performance day. The market held on well. I think it's a combination of so many things. Brexit, it's got its own life out there, but it looks as though there's agreement on the principle of Brexit. Now the question is getting a general election vote done. Jeremy Corbyn defeated Prime Minister Johnson today in a vote for a general election for December 12th. But tonight there's going to be another bill, and then tomorrow probably another vote coming on. This may be a December 9th vote. We'll see what happens. And this next bill that's coming forward, a little different. Nancy Pelosi today announced that she was going to call a vote this week in the House to see how the congressmen feel about the impeachment inquiry. It is not the vote on impeachment. It's how they feel on the inquiry. I guess it's one way to get around it. Metal markets down today, not a disaster, but a down. Weighing, of course, the stock market on that. The dollar index a bit lower. Remember, this is the week of the FOMC meeting. You're not even getting a bounce in the bonds and the notes. So traders must be thinking that the Fed, yes, they're going to do a quarter-point cut. That seems to be factored in, but that's it for a while. And that these insurance cuts are it's over with, and they're starting to put premium back in. 10-year note was up to 184 today. You're down a little bit in the energies, and with the cold weather snap that we're getting right now, it's come in. Well, you're up 11 cents in natural gas. But let's go to the markets and see just what they're offering us at this point. I want to get over here for you. And there we are. If you look at a weekly area chart of closes, this is the strongest close so far. Remember, we're only the first day of the week. When we step back just a little bit to where the week closed on Friday, the market closed at 30.20 and changed the pattern. Instead of us having lower closes, up here, now we ended up with higher lows and a higher high close, and the market's adding to that at this point. The bias has stayed up since back here in the summer when we were there in August, and once it got back over that 18-week average, it has stayed quite strong. When we go to the daily bar chart, I was pointing out to you a week ago, and I still feel it's valid. This, to me, is the head of an inverted head and shoulder. These are the shoulders. That's the head. And I think this market is breaking out to the upside. To prove that wrong, you're going to have to get through all this, but obviously you got to take out these lows to really break that pattern. But getting under this area here, I think that would do the job for some traders to say, no. Am I bearish? No, that's not what I'm saying. Every piece of work I have at this point is still friendly in terms of higher lows, higher highs. Bullish, unless you break out on the current pattern, 29.82. It can happen. It's, you're at 30.36. That's a ways off, but a piece of news could do that. What I am watching is suddenly the 18-day moving average of closes in red running up against the 29.82 level. Now, it's running to the tune of about, if you look at it, 5 to 7 points a day on the current trajectory, and that'll stay that way. So I'm looking right now for it to be very close to this 29.82 number in the morning, as you're going to drop one of the 18 days back here in that moving average. So support coming in against the old low. That's one way to look at it. Where's the resistance? The upper Bollinger Band. Now, you haven't hit those numbers since way back here, and now that you're approaching them, it's something we should be watching. 30.52 is that number that I'll be looking at. Tomorrow's Tuesday. You get a big up on a Monday in stock indices. Often, not always, you look for a Tuesday reversal as the market tries to consolidate what it's gained. If you come and take a look at momentum, you've got the embedded reading. So I've got the embedded reading, which is the most bullish reading on a chart I can get, the way that in my hierarchy of indicators. I have higher lows, higher highs, I have the bias up, and I've got an upper Bollinger Band as a potential objective. When I come into the NASDAQ, you went to that upper Bollinger Band today, and once you hit it, you ran into problems. The market got through it by a fraction, got up to 81.10, and then the market finished at 80.94. So it got to the upper Bollinger Band, peaked out. The high of the day was 81.27, and it settled about 15 points under it. Again, the first challenge of an upper Bollinger Band is often an area pros look at a market and take money off the table. It doesn't have to happen every time, but it's a rule of thumb. When I look at the Dow, you still haven't broken in the Dow through these other highs. This market is lagging the S&P. It has a pattern of a lower and low, higher high, which is not the same pattern as the S&P. It does not have an embedded reading. So it's a market that I'd say is going to easily encounter resistance up here more easily than the S&P, as that market's got the embedded reading, it's got the higher lows, higher highs. This does not have that. In the Russell, interesting market. I was looking at this to see what do we have. And what we had in the market on this particular day, and I'm going back to last Thursday, was we had an outside day down. Now, as you know, on Fridays I do a weekly chart, so I couldn't discuss with you the next day's action. What should not happen when you have an outside day down? You should not, in the next two trading sessions, take out that day's high. That's my rule. It's something I found researching charts left and right. If it's taken out, you don't go back under that day's low right away. It often leads to price running to the closest of a moving average above the market, a main one. I don't have any main ones. I've got all the main ones under it, or an upper Bollinger Band. You took out that day's high on Friday. Here's today. I think it's making its run at that number. That's the point that I'm making through here. What I don't want to see now is obviously to keep the pattern higher lows, higher highs, that taken out. But what's the hierarchy on the chart? The embedded reading. That's still the strongest thing that I see. Then when we look at the VIX, the market has got a pattern of a higher high, lower low with an embedded reading. It's bearish. Even though you don't have the pattern here of lower highs, lower lows, you had a bearish crossover. This was Thursday's action. Again, I couldn't discuss this with you on Friday. Here you're getting the 18 under the 100. And the market has yet to make a lower low. I expect it will with an embedded reading. We'll see if it does. In the T-bond market, we still have the pattern of lower highs, lower lows. That is bearish. The market is working its way down. You can see the embedded reading, and here's the interesting part. Here we are going, into the FOMC meeting. The market's widely anticipating they're saying the last of a quarter-point cut, as better things have been happening in the economy. And since the Fed had been saying these are insurance cuts, and we're seeing the economic data today, if you looked at the Chicago numbers that came out, Dallas, they're not strong. So what has happened is this market has gotten what it wants, but it thinks that the marketplace is better. And without a bounce, it means traders aren't even trying to cover these shorts just yet. 10-year note, same thing, embedded reading, downtrend. Are we going to make runs for the lower Bollinger Bands? If you lose the embedded readings in either of these markets, well, then I'll argue maybe we get back to the 18-day average of closes. Right now, the bears are in total control, which means higher rates, and we're up to about 184 in the 10-year. Even the TLT, lower highs, lower lows, embedded reading, no bounces at all. The dollar index is not responding to these higher rates. I think the dollar index is thinking, okay, the U.S.-China getting a trade deal done, first phase of it, it's looking really good according to all the press. That helps countries like Europe, Germany, go into that large export countries. Us, doesn't really matter that much. So the dollar's a little bit weaker, eurocurrency a bit stronger. Market coming down here, maybe it gets to the 18-day average of closes, and the dollar index, maybe the rally can carry up to the 18, but these are contra-trend. You're breaking while you're over the 18-day average. You're rallying while you're under it. So the bias is down here. The bias here is to the upside. These are just breaks within those trends. Even in the British pound, even though you have lower highs, lower lows, and is the market not? It still has the embedded reading, but if it loses it, all I'm looking for is a challenge back to this area. Being short over an 18-day average or long under, it's a very difficult project for me. In the Japanese yen, embedded reading, again, we had one of these contra trend rallies against the bias. The market peaked out 3 days ago, and boom, the market's just letting loose for new lows right here. Bitcoin got a piece of great news from China. China's told their developers they want blockchain, much more blockchain in it. That's a good piece of news. As for Bitcoin itself, well, we're through hearing about Libra for a while, and that jump today, I have to attribute it to Chinese news, but it was pretty strong on Friday. It had gotten to the upper Bollinger Band. The market had worked its way out of, when it got over this high, right through there. That ended any phase of a downtrend. Up here, it hasn't begun an uptrend, but this is what you call a vertical jump, rather dramatic. Makes this market hard to trade. You're up 10% now, but if the day's high, you were up way more than that. Very difficult markets to call. In the Brent versus WTI crude, this favors Brent pricing. Whenever you get back over this 18-day moving average of closes, it puts the bias to the upside for the Brent. When we come over to the crude oil market, and we're looking at the Brent here, you can see you've been up to the upper Bollinger Band fighting that battle. When you first hit a combination of a 100-day average and an upper Bollinger Band, I'm not saying it has to stop there, but I am saying you're in a zone it generally does. And I wouldn't be surprised if you pull there and you just stall out a little bit. The trend is up. The market is not embedded, it's overbought. If it embeds, I'll consider it in a different manner, even stronger than it is. But right here, I'm concerned about that. In the WTI, you hit the upper Bollinger Band and you're pulling back already to that 100-day average where the market was here. So, you get into these zones, if you look at them, of resistance or support, and you should pay attention to them. Things don't have to stop right that moment, but they're sending you a warning sign that maybe if you're looking to come into the market, you can do it at a better price. Gasoline, been running the upper Bollinger Band. The difference here is the embedded reading. You've got it. So that's strength. On pullbacks, I look for the market to still be well bought. And in the natural gas, have I not been warning you that when you get that first play of the year, you got to be careful. You're at now October 28th. We're getting cold, snow flurries. I just saw there's more snow in Montana's coming. The weather's moving out east. So if we take a look at what this market did on Friday, it took out 247.80. It made higher lows, higher highs right into the 18-day average. If it rallies from here, possibly it gets up here. If it stalls, this is the number it stalls at. It decided to get the pop off the weather, and now you've got that as resistance. Also remember, you had sideways action here. I wouldn't get overly aggressive in trying to say to myself, well, you're stalling at the upper Bollinger Band, it's going to fall back in price. Be cautious on this. Momentum up, bias up, you're in a bit of a run off of weather right now. I wrote your S&P report. I didn't write it, I recorded it, because that's what I'm doing now. I'm finding it so much easier for me to do a recording, and I can spend time on charts, show you what I like, show you the seasonals, and if you go to our website, it's all there. And I did seasonals, price counts, quarterly, weekly, daily charts for you. I threw the whole kit and caboodle in, and it's going to come off possibly as early as tomorrow or the day after. We only keep up my reports for 5 days. So if you haven't seen the special video report on the S&P 500, what it looked like about a week ago, what you want to do is go on the website and take a look. It's 5 business days that it's up, and then I take it off. And people have asked why, and that's because this is the futures market, not the long-term markets. I'm looking for what I think can happen in short order, and I'll pat myself. You take a look at it, you'll see what I'm talking about. I'm Ira Epstein. I'll see you tomorrow.